What is up, YouTube? In today's video, we're going to be doing a trade breakdown of this MMMXM trade that I took today. Just going over why I took it, why I entered, and the confluences behind the trade. So getting right into it. So starting out on the 4-hour time frame, as you can see, we have this higher time frame 4-hour bullish fair value gap that we've traded up, traded inside, and now we're starting to trade back inside of this range here. So now with this in place, my bias was bullish. Now you may be asking, why wasn't I bearish, even though we had this bearish fair value gap here? And the reason for that is because this bullish fair value gap is still holding, because as you can see, we still have this 4-hour high that's still intact. So I want to see this bullish fair value gap push price above this, and then that's when this fair value gap has already done its job, and then that's when I wouldn't use this fair value gap anymore. So now going down to the 15-minute, now that we have our higher time frame bias. So now on the 15-minute, as you can see, we had SMT at these resting lows here, which pushed price to take out this London high, which left us with a big bullish fair value gap on the 15-minute. And this aligning with the 4-hour time frame is giving me more bullish confluences and more of a bullish bias. So now zooming down to the 1 minute, where I took my entry. As you see here. So the reason for this trade was we tapped into this higher time frame 15-minute fair value gap, also sweeping out this low. Right, so this is the low that made this 15-minute fair value gap, and it's a clean low. We swept that, and we swept all of these low resistance lows here and here. So now my target was these 15-minute highs, because we swept this 15-minute low. So this is my buy side liquidity for this trade, and it's also in favor of the 4-hour liquidity. So aligning time frames and aligning where you want the trade to go, your bias, that gives you more confluences for the trade. So now with us sweeping out this sell side liquidity here, what I'm looking for now is sell side swept. So now I'm looking for the change of the state of delivery to ensure that we're ready to move higher. So what I use for the change of the state is I use the candle that swept the previous low. So this bullish candle here swept that low and also tap into the 15-minute fair value gap. So I would use the open of that candle here to look for my change in the state. So this would be my change in the state right here. And what I would look for an entry is the retest of that, which is also my order block. So you could label this / order block, because that's what it is, change in the state / order block. So now my entry would be on the retest of that level, but I got in a little bit late. I'd say it was like around there. So this is where my entry was. My entry would be at this level here, this order block. I would set a limit order for that level, but I got in a little bit up here. So, and then my stop was at this resting New York AM low with my forward take profit at that resting 15-minute high. So this is what the trade looked like. As you can see, we traded up, went immediately back into drawdown, but within drawdown, we created a bullish SMT with GBP USD. On GBP USD, we swept out this 947 low, and as you can see on Euro USD, we did it. So that is a bullish SMT, which is more confluences that we want to drive price higher and hit this 15-minute buy side liquidity. So a little thing that I want to talk about this trade is the immediate drawback, or the immediate drawdown. So as you can see, we entered the trade here, we shoot up just a little bit, and then immediately go back into the drawdown. Now, what a lot of people do is they'll get scared, and then they'll exit the trade, which you don't want to do. First of all, when setting a trade, always have a set amount of risk that you're willing to lose. So in this case, I put $500 on this trade because I am on a 50K account. Paper trading account right now because I am only 16 years old, but once I'm able to get a funded account, I will be trading live funds. But for this trade, I put $500 risk, which is 1% on this trade, and I'm okay with losing 1% because having a set risk management plan, that is in my plan, risking 1%. So with only risking 1% on this trade, I was like, okay, immediate drawdown, I'm cool with that. I'm cool with losing 1% of my account because I know with me only risking 1% of the account, I'm okay with losing that. I can make that back because I know my model is profitable in the long run. So with us going into immediate drawdown, my psychology in this trade was, to be calm, to be okay with the loss, and accept the loss. Automatically accept the loss no matter what. Even when you're in profit, you never know, price could go up, go up, go up, boom, go right back down. So always accept the risk that you are putting on the table. And also, don't risk more than you're willing to lose. So let's say my normal risk is 1% of the account or $500. I would only risk 1% of the account or the $500. I will not risk like 4% of the account because I'm not comfortable with losing that amount of money. Even if this trade did win, I would still not be comfortable with losing that amount of money. So I would have probably got out because I'm not used to losing that amount of money. So always be comfortable with the risk that you are putting on the table, no matter what. But yeah, this trade, I just wanted to share this because this is a perfect market maker buy model. Because as you can see, create low resistance lows here. All of these lows is low resistance liquidity. We take that, rebalance to a higher time frame imbalance, while also sweeping out resting sell side. And then my entry model, which is the change in the state delivery / order block, trades up, closes above, which shows me and it tells me that price is ready to move to this buy side level. So now after that, close above, we wait for a retest, and as you can see on this retest, this first candle here, this 9:42 a.m. candle, we do not close below. We wick it and we close back inside the range. So that tells me that that is a great entry and that I can enter off of that. So then you trade up, drawdown. Again, don't be scared of drawdown, right? As you can see, you went right back in my favor. Drawdown is nothing bad. Losing the trade is not bad. Losing the trade is only a loss if you do not learn from it. If you learn from the trade, it is not a loss, it is a lesson. But drawdown, create SMT inside the drawdown. And if you wanted to, you could add another position. With this SMT, the candle that creates SMT, that down close candle, since we are in bullish structure, that open here, we would be looking to take another entry off of the open of that candle. And if I were to do that, then I would look to enter off the retest, which is this 9:56 candle. So I'd enter here. I could either put my stop at this New York AM low or at this SMT low, since price should not return back to this level if this SMT is valid. And then I would target, again, the same liquidity zone. So if I wanted to pyramid this entry, this is what it would look like, but I did not pyramid this entry. And as you can see, again, this would be the change in the state of delivery. Put this on. This would be the change in state of delivery. And as you can see, we wick it, close back inside the range. Same thing over here. We wicked it, close right back inside of the range. So that's telling me that that is valid. Plus, also rebalance this 1 minute inefficiency. Also, inverse this 1 minute bearish value. So in this little area right here, right? In this area right here, this is telling me a lot. This little box here is telling me a lot. Why is it telling me a lot? Well, because rebalance to the change in the state, wicked above, you rebalance to this bullish 5 minute fair value gap. You inverse this 1 minute bearish fair value gap. So that right there is telling me that we want to go higher and see these highs. So that is the trade breakdown. I hope you guys got some very useful insight from this. I hope you guys learned something from this trade breakdown. And there's going to be many more trade breakdowns in the future. But I just decided to do this because I feel like this is a very, very A+ market maker buy model. This is textbook. This is what everybody who trades the market maker buy model or market maker models, this is literally what they preach. But I just want to break it down for people who don't really understand it and people who want to get a little bit more insight from it. But this is all it is to it. This is all it is to it. It's just higher time frame imbalance, sweep of sell side, rebalance to the higher time frame, rebalance to the higher time frame imbalance, and whatever entry model you want to enter off of. That could be changing the state of delivery. That could be inverse fair value gap. That could be literally anything you want it to be, right? Trading should be tailored to you and whatever you feel comfortable with entering off of. But yeah, just wanted to drop in and give this trade recap. Hope you guys really learned something from it. And I will be dropping more trade recaps in the future. But that is all for now. And I'll see you guys in the next video.